So in our previous video, we talked about the importance of stock options, why they're used, and what the tax implications are under the old regime. Today, we're going to talk about what the new proposed tax rules are with stock options if you exercise them after January 1st, 2020. So going forward, we don't have a date right now as far as when the rules will change, but after January 1st, 2020, any new engagements with regards to offering stock options to employees have to fall under the new tax rules. It's the people that had existing stock options that we don't know the exact date of when the rules will change. So here's the new proposed rules. There is going to be a $200,000 limit rule. And really what this means is that the first $200,000 of stock options exercised fall under the old tax regime. So what would happen is you would have a income on your tax return, and then you would also get a stock option deduction, which essentially amounts to a capital gain because you're only taxed on half the amount of the income. Under the new rules, the first $200,000 falls under the old rules. Any stock options above the $200,000 are taxed under the new rules, which means it basically falls under just any ordinary income. So you would be taxed at the full rate. So think about some planning situations here. Because we don't know the date and because we don't know how much time limit the Government of Canada will give us if they or when they change the rules, you might want to consider exercising now or soon under the old tax regime because you know exactly what the taxation is. Maybe the price is good now. Maybe when the new rules come into play and you don't have much time to exercise, the price of the stock might be as favorable. So some things to start thinking about. Talk to your tax accountant, talk to your advisors, think about the price of the stock and how it would affect you. The other planning opportunity that you need to think about under the new rules is the dates of when you're exercising. So if you go ahead and exercise all your options in one day, basically the first 2,000's under the old rules, anything above's under the new rules. But if you were able to stagger the exercise dates and do it over a 2 or 3 or 4 year period, you would get the $200,000 limit in each of those tax years. So essentially, if you were to exercise on December 31st and then January 1st, your stock options, you are essentially doing it all at the same time, but it would fall into 2 different tax years, and that's a huge tax savings for you as well. So talk to your tax accountants, talk to your financial advisors on the opportune time, and start considering the planning when it comes around stock options.